Hi, my name is George Benlian. I'm the Director of Sales at Hyecorp Property Group. Today I'll be having a conversation with Vache Vartanian, the Director and Founder of Hero Finance. We've been working with Vache for over a year and a half, him assisting our clients with their finance needs. Welcome, Vache.
Thank you, George.
And thanks for accepting this invitation.
Thank you, pleasure.
So I'd like to ask you, how do you see currently the finance situation with especially new apartments?
Yeah, with new apartments, look, it's actually a relief when we get a new apartment or off the plan purchase. Depending on how long is left till settlement, it's giving our clients quite a bit of time to prepare, which is good. The other thing that we're noticing is that clients have more of an option. So typically with the Hyecorp ones that we've worked on in the last 1.5 years, it's they've had at least 6 months to prepare their finances. The other thing which is actually really beneficial is the fact that interest rates are always changing. So clients always come up to me and they say, look, can I get a pre-approval now? We've got potentially what we can do is a lot of clients when they come, we can find out exactly how much they can borrow because they need to sign a contract with an off-the-plan purchase almost instantly. What the benefit of this is, we can tell them exactly what they can afford now as of today. They can then forecast, they can further save, they can work on a budgeting plan up until settlement. It just gives them that sort of flexibility for that extra saving as well.
But on the interest rates, actually, I mean, I remember when I bought my first place 20 years ago, I was paying double digits. And I guess nowadays we're talking for a home loan typically around the 2.5% in interest rate. I mean, isn't that, I guess, an attractive reality for young buyers to actually go into the market and invest into an asset that's going to appreciate in value over the years, but also in the meantime only pay like a small interest rate? And I know we don't have the crystal ball, but where do you see that, say, in the next few years?
Good question. Yeah, so look, when we don't have the crystal ball, like we said, but if you look at economy, you look at how the banks are moving, there's been a fluctuation of really cheap money that's been put into the banks. So that's allowed the banks right now to give good fixed interest rates. You can see the fixed interest rates hovering at about, for owner-occupied purchases, between the 2.09% to 2.29%, fixed for between 1 to 3 years, around 2.4%, 2.5% for 5 years. That gives an indication of what the banks believe their variable rates would also go to as well. Realistically, in this sort of market, I'd say we're not going to see much of an interest rate change. The interest rates, I believe, are either going to stay quite steady. If anything, they might even drop slightly, just to accommodate for what's going on in the economy.
Sure. Yeah. Okay. Another thing I'd like to have a chat with you is in relation to the current, I guess, situation we are in, COVID-19. It's interesting to say that this year, 2020, we actually had an increase of almost 70% in our sales figures compared to 2019. So there is a real appetite from buyers, whether they're first home buyers or upgraders and downsizers, to actually go into the market. I'm not here referring just about Hyecorp stock, but I'm talking in general. I mean, the auction clearance rate seems to be quite healthy as well.
78% last week,
75% or 78%, depending on the week. So I guess there is a real contradiction on one hand, economists being negative and being alarmed, etc. And on the other hand, the real estate market still very buoyant and still very active on all fronts. I guess location does play a role, without doubt, but I'm talking still in general with the clearance rates the way they are, with our own internal sales figures.
Look, New South Wales is what I'm commenting on right now. We've seen a huge fluctuation of first home buyers coming in. We'd say with the government grants, with the stamp duty exemptions out there, the changes that have recently happened. The other thing we're also seeing is these first home buyers and downsizers wanting to have smaller spaces that have a lot of amenities within the complexes. What you guys are doing with the pool, the local cafe, the childcare and all that, there is a lot of working from home happening.
I totally agree on that. I mean, all the Zoom rooms and the studies have suddenly became very popular, which I guess one thing we do well is giving options with our designs, so that obviously does help our potential buyer to have choice rather than being stuck with the typical 1-bedroom or 2-bedroom or 3-bedroom.
Yeah.
And definitely, I think, yes, buyers are very attracted to that reality. I mean, another thing which we're seeing is, I mean, this is more recent changes, obviously, with the introduction of the $25,000 home builders grant.
Yes.
Which they did it in a very restrictive way, because only a handful of projects could actually pass that benefit to their clients. And somehow, out of pure coincidence, our latest project, Kira Lanka, is one of them. And I saw, I mean, a huge number of first home buyers, but also second home buyers as well, because the grant is actually applicable to all sorts of buyers, excluding investors. And definitely that gave a big boost, because not only if you're a first home buyer, you're saving fully on the stamp duty, which otherwise, will cost you $25,000 to $35,000 depending on the price, but also getting a $25,000 from the government, which you can obviously pay towards the mortgage. So I guess that sort of benefits does help, but saying that our 3-bedroom stock is also very, very popular, where you get zero benefit, but nevertheless, I guess there is a demand for it because of the young family and so on. So when it comes to the banking point of view, from finance point of view, any preference on the bedrooms, or sort of it's case by case? Like, is there sort of, is it easier to say a 1-bedroom apartment to get a mortgage, or it doesn't really matter?
Good question. Look, a lot of banks have a look at the size of the actual apartment. So starting from 40 square meters internal, some banks will just say, look, we're not taking anything less than 40 square meters. The other one is some lenders can take 50 square meters, including balcony and the garage as well. So in terms of that, it just needs to be 1 bedroom. It can't be a studio. They won't take a studio. There are some suburbs that have restrictions for high density apartments in terms of how much they can lend for that apartment. They tend to cap that at borrowing 80% of the purchase price. But luckily for you guys, recently, Sia in Sutherland and Lane Cove. Both those are unrestricted suburbs, so you've been fine with those.